Today in this video, I am going to answer the most commonly asked questions about the one candlestick strategy, and I'm going to show you how you can use this on a daily chart every single day to get entries. Now, I'll talk to you guys about some other things, some other concerns that you've been having as we go along the video. So to explain to the person who has not heard of the one candlestick strategy or who has not used this strategy before, I'll just give you guys the basics. So here on the chart right here, I have two candles, okay? Now, these candles here can be a daily candlestick or a monthly candlestick or a weekly candlestick or a 1 hour candlestick, depending on how long you're going to hold your trades. Are you going to scalp? Are you going to day trade? Are you going to swing trade? Are you going to position trade? That is what determines which candlestick you are going to mark. Now, the first and the most common question that I have gotten in the comment section of the videos is, what candle do you mark? Do you mark the currently printing candle or the open candle, or do you mark the closed candle? Now, my answer has always been the closed candle. The most recent closed candle is the one you're going to mark. Don't mark the candle which is printing. For example, here, if the candle is printing like this, okay, if this candle is printing like this, it's printing up and down, for example, like this. Let me just add here week, so that will make it a bit more realistic. All right, so if the candle is printing like this, up and down, this is an open candle, right? Don't mark this open candle here. The candle you're going to mark is this most recent closed candle right here. That's the candle you're going to mark. It's the same with the bullish candle. This is the open candle. It's playing up and down like this. The market is open. Don't mark this candle right here. Don't mark this candle. Mark the most recent previous closed candle, whether it is a daily candle, weekly candle, 4 hour candle, 1 hour candle. Use the candlestick that has closed. Don't mark the candle which is open right here. Okay, most of you have been asking me how to do the markings, and I've referred you to the full course on the one candlestick strategy, but I'll also leave that course at the end of this video. So watch this video up to the end, then go and watch the full course. It is going to be free of charge. You'll learn everything you need to know about marking the one candlestick to get your entries on a lower time frame. So the whole theory of marking this candlestick here is based on the internal candle range, okay, or the internal candle structure. Let me just delete this so that I can give you an illustration here. Okay, so what you're going to do is you're going to first mark this candle's high. Let's just mark the high like this, and then we are going to mark the low like here. We are marking the high and the low like that. Okay, let me just remove this other candle right here. The other question some of you have been asking is, does this work on only bullish market, or does it also work on a bearish market? That's why I'm giving you an illustration on the two candles. Okay, so it works on a bullish market and also works on a bearish market. But how do you do the markings? The markings, you first mark the high and the low. Here I'm marking the high and the low because you're going to mark the low of the previous bullish candle, or you're going to mark the high of the previous bearish candle if the previous candle was bearish. Okay, we'll look at those conditions later on. So first of all, you mark the high and the low, and then you also want to mark the close of those candles. Like for the bullish candle, it closes at the top like here. Let me just use that for the bearish candle here. It closes at the bottom, the bearish candle, and the bullish candle closes at the top like this. Okay, so that's the bullish candle's close. This is the bearish candle's close. So you mark the close of the bullish candle and the close of the bearish candle. Okay, and then you want to mark the low of the bullish candle, which is down here, and you want to mark the high of the bearish candle, which is up here. This space in between the close of the bullish candle and its low, that is the tradable zone. What I always advise is that you can put there a zone, which for me I like to call a purple zone. Okay, put a purple zone there, right? Can be any color, but I just like using purple. Then the purple zone for the bearish candle is going to be between the high and the close. they are switched. Okay, for a bearish candle, it is the high and the close. In between there, that's the tradable zone. For a bullish candle, it is the close and the low. That space in between is the tradable zone. So what is the tradable zone? Some of you were asking me, what is the tradable zone? The tradable zone is the distribution zone of this candle here, which has closed. That purple zone is the distribution zone, or the accumulation and distribution zone, or the manipulation and distribution zone of this candle. I'll show you that in a minute. And for a bearish candle, it's a distribution or manipulation zone. Okay, so internal structure of a candle looks something like this. For a bullish candle, it opens at the bottom here. The price will move like this sometimes, and then it will move down to create this wick you're seeing here. Okay, and then after it has created that wick, that's the accumulation phase within the market. And then the market usually will manipulate something like this. We may produce a very quick movement up and down like this, and then it now moves up and creates the distribution until it closes the day. It does this. It first goes up and creates that wick here that we see like this, and then it comes back down and closes at the end of the day like that. That is the internal structure we want to trade on a lower time frame, like a 5-minute chart or a 15-minute chart. For a bearish candle, the market, this candle here on a lower time frame, like a 5-minute chart or 15-minute chart, it opens on top like this. It goes up and creates this wick, or it can just move down first like this and create a manipulation. Then it goes back up and rejects and creates that wick you're seeing here. Okay, after creating that wick, then it starts now distributing. This body of the candle pushes down to create this low, this wick, and then it closes at the end of the day like this. The distribution phase of the market is where the most volume happens. Most volume happens during the distribution phase of the market. So the distribution phase of the market is where this body of the candle is formed. You see this body of the candle, it's formed during the distribution phase of the market for both bullish and bearish scenarios. Okay, so this black wavy line here you're seeing is the internal structure of this higher time frame candle, which in this case is the daily candle. So how do you manage to trade this? How do you trade this? Most of you ask me, how do you trade this? Now, you trade this by understanding that when you have finished to do your markings on a higher time frame, which is the daily chart, you've marked the close of a bullish candle and you've marked the low of a bullish candle, and you've drawn a purple zone here in between. Okay, you've drawn a purple zone in between. You go down to the 15-minute chart or the 5-minute chart, and then you will start to look for candlestick confirmations within the purple zone for you to take trades. So to trade this, you are looking at the momentum of this candle of the previous day to continue bullish. You're looking at a bullish continuation of this candle. So what you want to wait for is the next day, you're waiting for the market to come back to below this candle's close, below yesterday's close, which is the area within this purple zone. Sometimes the market will go down deep like this and create a wick and then go back up, but you don't have to wait for it to go down so deep. You just wait for candlestick confirmations around the purple zone for you to get entries, like on a bullish engulfing, a double bottom, inverse head and shoulder, whatever, for you to get in, and then you buy within this tradable zone. You can take your trades when you see like a double bottom formation like this within the purple zone, or if you see a break of structure, like if you see that previous high on a lower time frame getting broken here by the market like this. When the market breaks here, you can wait for it to pull back after that break, and then you jump in on a trade to go up. It's the same in the bearish market here. Okay, the same. When you see the next day after you've marked this previous day, you're waiting for the market. For example, the market can open here to continue this movement of the bearish day. If yesterday was bearish, you expect that momentum is going to continue to create another bearish candle for the next day. So you wait for that candle to create, maybe it's a manipulation move or accumulation phase like this, and go into the purple zone here or close to it, okay, and then give you confirmation candlesticks within this area or near this purple zone for you to sell the market. Now, most of you have also been asking me, what about if the market comes like this, the next day's candle comes and breaks this? You don't look for buys anymore because the previous day's low has been violated. You're only going to wait for the market to come back within the purple zone or retest it, and then you look for sells because now this market is reversing. The same thing is true for a bearish market. If the next day's candle opens and pulls so deep inside of the purple zone like this, and then it breaks this high, you are no longer looking for selling opportunity. You're looking for a buying opportunity when the market pulls back near the purple zone or within the purple zone and gives you bullish confirmation for you to go long. The other question you guys have been asking is, how long do you hold these trades? You can hold these trades as long as you want, or as long as your profit target has not been reached. You can hold it for a 1 to 2, 1 to 3, 1 to 4, whatever risk to reward ratio you want. But this is the principle of trading the one candlestick strategy on a daily time frame. This same exact principle or these exact rules that I've shown you here can be used on a 4-hour chart, can be used on a 1-hour chart to mark the 1-hour chart as a higher time frame. Then you go down to like a 5-minute or 1-minute chart to scalp. You can also do this on a weekly chart if you want to swing trade. You can do this on a monthly chart if you want to hold your positions like for a full month. So this strategy applies to all candlesticks, but here I'm showing it to you guys on a daily candle. You only need this one daily candle strategy to become profitable. Guys, if I showed you how many traders have sent me WhatsApp results of how they are making money off of this strategy that I've given you guys for free here, nobody here on YouTube explains this strategy the way I explain it here. It is a very simple method that you can use to trade every single day and make a lot of money that can change your life. This is the illustration that you need. You don't need to tweak it. You don't need to do anything. Just understand this and you'll be on your way to becoming a profitable trader. Now, let me just repeat this just one last time, guys. In a bullish scenario, you want to mark the previous daily candle's close and its low. Make sure you mark the candle that has closed, whether it is a 4-hour candle, 1-hour candle, weekly candle, or daily candle. In this case, mark the candle that has closed. The most recent closed candle is the one you're going to mark. Don't mark the candle that is open and printing at the moment. For the bullish one, mark its close on top and mark its low. And then in between the close and the low, put there a zone. You can use any color, but for me I use purple zone. Just mark a zone in there, and then you can go down to a lower time frame like a 5-minute chart or 15-minute chart for you to look for entries. The other thing is, on the next day's candle, which is now printing, wait for the market to come back inside of this purple zone and give you confirmation candlesticks within this purple zone, like a bullish engulfing, a morning star formation, a double bottom, an inverse head and shoulder. It can even be a trend line break. If, for example, the market has been creating some small lower low trends like this, and then you get this kind of movement like this, the market goes like this up. There can be a small trend line here that you can look for the market to break. You can use this trend line break as your entry to go long for you to continue buying. Just get candlestick confirmations within this purple zone to indicate a bullish continuation. The scenario that can cause you to change your bias is when the market pulls into the purple zone the next day and breaks this low here. If it breaks this low, you don't take trades, okay? You wait for reversal trades. For example, if the market breaks here and goes like this, wait for it to come back near that area or inside of the purple zone and give you a bearish continuation for you to now reverse the trades and sell them from a bullish day to a bearish day. You can sell like that. The same thing can happen here on a bearish day. If the market pushes up and breaks the high of the previous bearish candle, then you reverse, you wait for the market to come back near the purple zone and then you look for bullish confirmation candlesticks for you to trade a reversal to become a bullish trade from a bearish day. So this is how you trade the one candlestick strategy on a daily chart, but you get your entries on a 5-minute chart or a 15-minute chart, depending on where you get the best entries. You can either look for entries on a 15-minute chart. If you find a good entry on the 15-minute chart, enter there. If you find a good entry on a 30-minute chart, enter there. If you find a good entry on a 5-minute chart, you can enter there. The lower the time frame you go, the better your risk to reward might become. Okay, so that is how you trade the one candlestick strategy on a daily chart using just one daily candlestick. Now let me explain to you one final thing, guys. Remember, guys, if you're getting value from this, please leave a like on this video, guys. I need your support. We are on our way to 50k subscribers. If all of you guys who are watching this give a like on this video, please subscribe to the channel. It will really bring a lot of joy to me if you guys subscribe to the channel. It will really motivate me to bring you guys more of this free content. And also share this content to your social medias. You can share this to your friends and everybody you know who is struggling with trading. Share this with them. Let them go and subscribe to the channel, because I'm bringing you guys a ton of value here. And also I am going to continue trading this one candlestick strategy to pass my Audacity Capital Prop Farm challenge. Guys, subscribe so that you can be able to get notified when I start releasing the videos for that series, guys. So the final thing I wanted to explain to you guys is this. When you're trading this candlestick strategy, okay, let me do that on a live chart right here. Okay, so this is the chart for GBP USD. When you're trading that format, this candlestick strategy, okay, make sure when you're trading it, you are trading in a direction of the general prevailing market trend. What do I mean? If the market is creating lower lows and lower highs, make sure you are trading in that direction. For example, here when the market is moving down like this, okay, when the market is creating these lows, like lower lows, lower highs like this, okay, like this, when the market is going down like this, don't start looking for, don't trade these bullish candles you're seeing here, these blue candles within that downtrend. Don't trade them on this kind of strategy. Okay, don't trade the one candlestick strategy like in a bullish scenario while the market is creating a downwards market structure. Only look for sells here. If you look for only sells here, like if you only trade the black candles, whenever you see a black candle, you do its markings, go down to a lower time frame, and then trade the next day's candle. Okay, you'll get a more win rate, or your win rate will be higher. But if you're going to start trading like these bullish candles here, you will get some wins, yes, but your wins will not be as good as when you are trading in the direction of the prevailing market trend. So when you're going to trade this, make sure you first see what the prevailing market trend is. Is it a downtrend or is it an uptrend? If it is an uptrend, like right now, it is creating an uptrend. So you're looking for only the buys here. Like here, it is creating this high. It's creating this higher low here, which is higher than this low here. There is this higher low. Now it has created that higher high. It's a wick, yes, but it's a higher high. And then it's creating this higher low. So within this area here, you're looking for only buying opportunities. So keep that in mind. You can also use a moving average, like a 20-period moving average, to help you with the trend. This 20-period moving average, when you put it on the chart, it will help you to see where the market trend is. Like you can see here, all the way from up here, the moving average was above price. So you're only looking for sells. On the moving average crossed and the market went above it, you are now looking for only buys here. Don't trade against the trend, and you'll get a much higher win rate with this one candlestick strategy. So this video was just to explain to you guys how you can trade this strategy. For anyone who has been asking those questions, this video was to answer those questions and to explain to you how you can improve your knowledge on this one candlestick strategy, guys. Guys, I really need your support. Again, please subscribe to the channel, like the videos, and let us all benefit. Thank you guys for watching. Until next time, peace and out.